Good morning, traders and investors around the world, and welcome to Wednesday's edition of premarketinfo.com, where we prepare you for the most important hour of the day, the first hour. Dennis, we got the S&Ps trading down 5 points this morning, unable to hold yesterday's close. Any news we need to be aware of?
Just slowly starting to get a little bit weaker here, Joel. It's been kind of a quiet session so far, but we have been drifting down. Some of the European banks, I think that's what's driving. Again, I know we sound like a broken record. I know CNBC sounds like a broken record saying the same thing, but it seems like as Europe goes, we go. We've got some of these European banks down, like Deutsche Bank down over $1 this morning. I think that's what's putting some pressure. So your financials looking a little relatively weak here this morning.
Okay, the S&Ps made a high last night at 1274.75, just above the daily pivot of 1274. So that's our first stopping point on the upside. If that holds as the high of the day, we have a downside target at 1255, which would take us below that gap we had from Friday, Friday's high between yesterday's low. The Globex low currently stands at 1267, kind of drifting down, making new lows here as we speak. If 67 holds as the low of the day, we have an upside target of 1286.75. I think in order to turn this market around right now in the pre-market, we need to get back above the mid-range, 1271.25, back up to the close, getting a little bit of resistance in that area. Moving on to the Big Ten, Apple Computer attempted to fill the gap that it had from that earnings disappointment back in October. Only managed to get up to 412.50 before peeling back and settling at 411.23. Looking at the downside here, 409, yesterday's low, should be our first stopping point. Below that area, though, Dennis, things open up here until you get down at least to Friday's close at 405. I don't think I'd want to be long this thing going to 409. Coming back on the upside, I'm sure we'll get a little breathing point here at 412.50, which was yesterday's high. Above there, attempt to fill the gap at 415.99, which was low on October 18th.
Yeah, and then above there you start talking about the 420 area, and then obviously the next level after that would be the 426.70 52-week high. Only thing to keep an eye on, I've been saying it for the last, few months here, Apple seems to trade with Google very well. Google had a really nice run there yesterday, up over 3%, breaking out too. So if that's any indicator, then Apple might follow suit here eventually. Obviously some significant support down here in this 405 area. So if we were to break down through the 409, I think he's finding a little bit of support at 405. And Joel's right. If we start getting above 412.50, then, we look to fill that gap up to that 415 area and possibly even up to 420 after that. So this is a stock I still think pullbacks are to be bought right now. It is looking bullish on the charts. Things can change in a hurry. You always have to be ready to flip your trade. But right now, Apple pullbacks still look like they should be bought.
Okay, one other thing I note yesterday, 3.5 point range in Apple yesterday. So after that big run up from under 380 to over 410, you get a consolidation, 3.5 point range. Get another day or two like that, and we should get a setup for the next move. Moving on to ExxonMobil, trading down 33 cents in the pre-market. Made a nice run yesterday at our May 3rd high, which was 86.78. Stopped short just at 86.67 before peeling back, settling at 86.30. Trading down in the pre-market now. We have Tuesday's low at 85.90. Now that was our first stopping point. We are below that now, so that should act as resistance. Really don't see other good support in that thing down to the Thursdays and Fridays high at 85.29 to 33. Looks like we're going to get a test of that off the open. Coming back on the upside, I'm sure you'll run into some resistance at the close.
And that 85 area overall was a big psychological level for a long time. I do think it might come into play because it was providing a little bit of resistance earlier on in the move. Now that could provide support as we pull back to that 85 area, sticking with my whole number theory. Breaking out here, obviously we get above yesterday's high of 86.67. Then we go into breakout mode again. The 52-week high on this thing is 88.23. That's kind of where I think it wants to go and test eventually. I know Chevron yesterday made a new 52-week high, breaking through that key 110 area. So if ExxonMobil starts going to rally mode again, don't be surprised if, we get another strong. They're looking a little bit weaker this morning, pulling back after a really good day yesterday.
Okay, moving on to our next component, IBM, currently trading down 60 cents in the pre-market. We are going to be opening up below Tuesday's low, so we'll be looking for a resistance at 186 all the way up to the 186.30 area. Above that, there's really nothing in the book until you get to 188.71, which was Tuesday's high. Coming back on the downside, below Tuesday's low in 186, I don't see much until Friday's low at 183.85.
This weight is relatively strong as some of the other tech stocks. It always seems to be kind of battling to go up. I remember that one day there we had the stock was down 6 or 7 points. Remember that day, Joel, where we were really weak and some of the other tech stocks were holding up, but it had some relative weakness. Just seems like it finds sellers as it goes into rally mode here, and especially I think if you were to get above that 188.71 area, then we could start talking about that 190 area. I know we talked about that number for a couple of months. Obviously, it was a size seller that was taken out, but from a psychological perspective, I think that would provide some decent resistance up there as well. So I think you get in the high 180s. I think you find sellers in IBM.
Okay, well, I hope our listeners do not try and fade that open in Microsoft yesterday as it gapped above that major resistance, made a run at the $27 level, which was our November 14th high, got turned back at $26.96 and closed at $26.76. Find resistance now anywhere above that 26.90 level all the way up to 27. Probably get 3, 4, 5, 6 tests of that level if Microsoft acts anyway in its true behavior. Coming back on the downside, you got Tuesday's low at 26.39, which could provide support the first time down, and then look to fill the gap down to Friday's high at 26.13.
Well, we could pat ourselves on the back on this one, Joel. I think we got this one pretty good yesterday, saying when it broke out above that 26.30 area, that would go into breakout mode, and that's exactly what it did. And we kind of picked the resistance spot on, too, right around 27, just in front of it, 26.96 the high. Joel, you're absolutely right. I think this is a stock where it likes to make 2, 3, 4, 5 highs at the same price. This 27 to 27.40 area was the area that we were talking about for a couple of months back in October. We were jokingly saying that maybe it's Bill Gates just sifting out a stock up there because it kept going into that 27.20, 27.30 and selling back. Surprised if we did go up to that 27.30 area, I think you'll find all kinds of sellers up there.
Okay, moving on to Chevron Corporation. Folks, owners of Chevron Corporation, new 52-week high yesterday, and let's call it an all-time high. 110.99 in that stock, busting through that 110 level. I did actually see it go through there. I didn't know if the size went quickly or how that went, but Dennis, you can give us a recap of that. Peeled back, SPUs sold off. It peeled back, closed at 110.37. We are now opening up again here below this level. That 110 should be a good swing number. Folks, just a note here, the last 3 times that this stock, 3 or 4 times, and it's got up to this 110 level, it hasn't been there very long. So use that 110 as a swing number. Our first support on the downside would be Tuesday's low at 108.73, and then you really got a gap down to 107.50, which was Friday's high.
through that 110 area. I was short, but then I did get covered. I chickened out because it kept nibbling at it. So, and then I actually did eventually take it out there. I think it took it out right around 10 or 11:40 there. You can see the spike on the chart when it actually did take out that 110. Spiked up to 110 and a quarter, and then, catching people going long through that number, shook them all out, going down as low as 109.60, and then we slowly drifted back up through the number. Got up to another resistance number of 111, Joel, believe it or not, another 50,000 shares at 111 put a top on this one. So, it's funny, how it's these psychological numbers, but then, institutions throw out these numbers at new highs, and that's what puts, the tops on them as well, because you got another 50,000 sellers sitting out there at 111. So that's what topped the stock out, sold off from that point down to, and now it's trading down at 109.89, so pulling back. But if we were to get up that 111 area, I'd expect resistance from those high frequency guys that like to sit in front of that size in the high 110s.
Okay, J&J, you mentioned that you thought some of the defensive stocks, you saw identified some sellers in the pre-market there. Those stocks did open up, rally, not as much relative to the overall market. J&J here, just running into a wall at the $66 level, a couple highs from the end of last week, and then yesterday's high at 66, closing just below that level. Above that, you have last week's high at 66.32, but Dennis, it's just having one heck of a time getting through 66. Coming back on the downside, really don't see good support in this stock until yesterday's low at 65.31. So perhaps if you're short, start nibbling in the 65.40 area.
Yeah, I'll limit my comments, Joel. I do have a trading position on in Johnson & Johnson.
Okay, moving on to our next component, which Dennis had a pretty good call on yesterday as far as being up relative to the market. Did open lower, made a low at 66.27, but battled back up to that $67 level, Dennis. Tuesday's high, 67, right on the nose. I mean, folks, if you could take a look at this chart, if you can't see it well on our platform, take a look on yours. I mean, that's the look of a top there, Dennis. What do you think?
Yeah, well, I must think the same thing, Joel, because I got to limit my comments on this because I got a trading position on in that one too. But I've been talking about that 67 level for quite some time. So when you talk about a level that many times and you don't do what you say, I should be trading my calls, and that's exactly what I'm doing here by selling in this upper area. It breaks out through that 67 though, and I'll definitely be covering my short position.
Okay. Moving on to AT&T, what can we say? The new range might be 30 to 30.5 here. Got up to 30.54, which was just shy of the highs that we had in the middle of July in this stock at the 30.70 level. You had the old Friday's low or Friday's high, Tuesday low trick here at 30.30, so there was no gap on that stock. If you were quick, you could have bought it there without a gap. Coming back below this 30.30 area, Dennis is going to tell you there's support at 30, but I don't see much down till Tuesdays and Thursdays low at the 29.84, 85 level. This stock looks like it's looking kind of tired too, Dennis.
Looks very tired to me as well, Joel. I know I've talked about this 30-50 area as being a possible resistance point. Stock, though, it's showing a little bit of relative strength here this morning. Like, I know they had a TiVo thing where actually a New York judge there, you can read on our Market Movers page, didn't rule, but just kind of gave the TiVo lawsuit that's against AT&T a little bit of legs. But stock doesn't seem to care this morning since it's actually trading up 10 cents on a day we're down 5 points. I know there was an upgrade from Evercore Partners that was being reported, but then I thought that they refuted that and they said that wasn't upgraded. So maybe it is upgraded this morning, and that's why we're trading up here. There's one report that said it was upgraded, another report that said it wasn't upgraded. So I'm not sure who's right there on those reports, but somebody's wrong, obviously. But the way it's trading like it's upgraded because it's up 12 cents on a day we're down 5.
Okay, just move quickly through our last two stocks. GE made a nice high there at 1850. We had 1851 as resistance from back in July. Peeled back to close at 1836. Tuesday's low should provide some minor support, but I'd be looking under the $18 level if that 1823 does not hold. And another shot at 1850. I'm sure you'll get some sellers.
1850 is the number, Joel.
Okay, Coca-Cola made a new high from last week, got up to 70.71, sold off with the SPUs at the close, closed right near the low, 70.13 with a 70.13 close with a 70.10 low, support in that 70 area. Below that, I'm looking for the 3 and 4 day lows in the 69.50 area.
And 70.5 is a big number on resistance.
Okay, folks, that's our first show this morning. We'll be back with our market movers.